Right now. All right. Good morning. It is January 24th, 2022. Hope you guys had a good weekend. And the exam scheduled for this Wednesday, the 26th, is postponed, and I don't have a date for you as to when we're having it. So stand by. Hopefully by Friday, I'll know the answer to that question. I do want to have it one way or the other, so we will hopefully do that. However, we're going to move forward with the review the practice exam. I saw that you guys posted responses last night, and I want to answer any questions or do maybe a little bit more practice. Because we're postponing the exam, because the exam won't be this week, we'll have to build in another like a half-hour, 40-minute review session the day before the exam. So we'll just kind of work around that.
I have one question.
Yes.
Do you know when you're going to post the solutions for the practice exam? Because I feel like I'd probably need a little bit more time to study with the whole like online format. Like my learning isn't as up to speed.
You don't, Micah, your learning is just fine. No, I mean, I think you're speaking for most people when you say that. But yeah, I want to take a look at what you posted and see that first, and then make sure everybody posted something, and then I'll put the solutions out. So I think for sure, typically I post the solutions about 2 days before the exam. That's my typical practice. So are you asking for more time than that?
I'm just wondering like what the plan was. I don't know.
Yeah, we're all wondering what the plan is, but yeah. So at least 2 days before the exam, and since it's fresh in your minds right now, I might post it sooner. So, all right.
So when is the exam going to be, or you don't know yet?
I do not know yet, Jared. The college supposedly is making a decision on tomorrow regarding what the plan is for the college on return to campus. However, I've been watching University of Washington's website, and we tend to do kind of echo what they do. And they have said they're not making a decision until the 28th. So I suspect that we will delay our decision until we know what University of Washington's doing. So.
Okay, but will we have a little bit of a warning? Like
yes, absolutely. So what I said at the beginning of class was we're going to do a little review today, and then whenever the exam is scheduled, the class before that will build in another half-hour, 40 minutes of review.
Okay, thank you.
However, we need to move on because the time that we would have spent taking the exam, we're going to have in a week or two. So we're going to have to move on and use that class time this week and give that class time away in the next week or two for the exam. So we'll move on with chapter 10 today. I want to go over the essay question on the exam. I've been looking at your writing samples from the first day of class, and I want to give you my guidelines for how I want you to do some accounting analysis. Okay. And then we have we don't have a lot of extra credit winter quarter because so many business students are applying for transfer. And so the focus is on the writing skills assessment. So that is your big extra credit opportunity. And there's like 3 different mock exams that you can participate in. But we do have Ambassador Pamela Spratland. So let's go over to that and take a look at, if I can find it. Let's see. We've got, so under the units and module pages, you would click on extra credit opportunities. And I know some of you have already done that. And the first one was go to the Business Studies Center. I know a lot of you did that. If you need extra time, I'll give you 1 more week on that Business Studies Center. I really want you all to connect with it at least once this quarter, and ideally work with Yi and some of the other tutors who can help you with questions you have and do more practice. They have all the solutions as well. So here we are, Ambassador Pamela Spratland. There may be some less big events where the BLC officers bring in our experts from the Bellevue College Career Center, and they bring in people who do something called Strength Finders, where you do some questionnaires where you discover your strengths and some activities there and some LinkedIn stuff. But our big speaker is pretty much this unless we bring in another person. So here's Ambassador Spratlan. She's had a long career as an ambassador in the State Department, and she's going to talk about careers there. So it'll be about an hour, and I think we're taping it. I don't know that we have her permission to do that yet, but my hope is that we're going to do that. So what do? You go, you do a little essay. Who was the speaker? Give us a little background. What did she say? And then your reflection on it. Do you agree with what she said? Do you disagree, and why? So usually half a page, 3/4 of a page, nothing really long, but just something that shows you were there and you got something out of it, either positive or negative. Okay. All right. So then we're going to do.
How do you want us to submit extra credit for the mock WSAs?
Take a picture of your feedback page and the first page of your feedback of your writing. So I know what your feedback was from Carly, faculty Carly Yip, and I also know which question you were addressing. So just take a picture of both of those and upload it.
And can we get extra credit for all 3 of those WSA mock exams?
Yes, you can. There's a cap on extra credit of 6 per quarter. So whenever you hit that cap. So, all right. Okay. All right. And then we are going to begin chapter 10 today. So hopefully you have your course packs available. So let's go to the practice exam. And was there anything in there that was a surprise? Was there anything in there that was or was it pretty straightforward? The exam will be 100 points. It's all pencil work. There's no multiple choice. And in my classes, the more work that you show, the more opportunity you have to earn extra credit. If you just put the answer down, that's great. But if it's wrong, it's all wrong. Or if you show me your work and I can see that you were right up to a point, I can give you extra credit. So, and not extra credit. I can give you partial credit. Okay. All right. So anything big in chapter 8, accounts receivable, anything that stuck out at you in that?
I just have another quick question regarding the test.
Go ahead.
So if we do get pushed out for like another 2 to 3 weeks, say for online, are we going to end up taking it online?
That's a possibility, Bryce. I hate online tests with a passion. So I haven't even wanted to discuss it, but I have to be flexible if we're stuck online. So yes.
Okay, thanks.
Have you had an online test before?
Yeah, but just for dedicated online classes.
Yeah. So it's, we're just in new territory. The numbers keep coming down, but again, we have to be flexible. All right. So, and what another instructor has been doing that seems to work pretty well is it's an online test, but you take it during class time. So you, everybody has their cameras on, everybody's writing their answers on a piece of paper. And then at the end of the test, you have 10 minutes to upload your answers, that kind of a thing. So it's handwritten answers and then you upload it. So one of our instructors did that last year and had pretty good luck with that. So, all right. So let's stroll through this. So this should not be, hang on, let's see if I can make this bigger. See if I can, so this is pretty straightforward. You're doing the adjusting journal entry to estimate bad debts. You're tracking your T accounts. We're going to go into chapter 10 and I'm going to be having you guys, I'm going to be encouraging you guys to use the T accounts. That will save you in terms of really understanding the material and understanding that debit and credit stuff. I know we haven't been doing accounting that long, and you guys are learning accounting. And so the T accounts really help with debit and credit. Okay, so here you had a beginning balance and you have to, depending on the method. So what's the trick on these? So when you have a problem, let's go, sorry, moving it around too much. Calculate the estimated bad debts. show your calculations on the AR schedule above. Make the adjusting journal entry to estimate bad debt expense. Okay. Now, your first question is what? When I ask you to estimate bad debts, before you even start the problem, what should be your first question? Put it in the chat, direct message it to me. You're estimating bad debts. The first thing you need to do, because if you don't get this thing right, you're going to get the wrong answer. What's the very first thing you need to ask about the question? Zachary, can you be more specific? Helena, can you be more specific? Zachary, you're almost there. More specific. Nope. Micah? Katya, that is a good question, but that's not your first question. Katya said, what is the existing balance in the allowance for doubtful accounts? That's an important question, but that's not your first one. Helena, correct. So there are two ways to estimate bad debts. For the rest of you, what are those two ways to estimate bad debts? There's two methodologies. Katya says write-off method, and that's actually not allowed. So we're pushing that one to the side, and the allowance method has two methodologies. Julie, be more specific. You're almost there. So I tell you, I need you to estimate bad debts. You've got two methodologies, two ways to do it. What are they? What are their names of the two methodologies? I'm looking at the chat. So go ahead and put it in the chat. Annie, that's one method. What's the other one? Katya, I'm not sure what the first three letters mean, but I think I know what they mean. Can you give me the words instead of just letters? Julie, you're correct. Okay, so you have two choices. What methodology you're going to use? Got it. Okay, so the first method is the AR aging method, accounts receivable aging method. The second method, which is super easy, is percent of sales method. Okay, AR aging method, percent of sales method. In this first problem, which method are we using? In this first problem, which method are we using? AR aging method or percent of sales? Can you see my screen here? It's page, I don't know. It's the course pack, page 3. Oh, it's the agenda slide. Well, heck, no wonder you guys are wondering. I'm looking at the wrong slide. Hold on. Let's go to this first problem. Thank you. Thank you, Julie. Can you see it now?
Yeah.
Thank you. Okay. So in this first problem, it says, calculate estimated bad debts, show your calculations, but you have to go up to the top and read the directions first. I'm not big on reading directions, but I've learned the hard way that you kind of have to. So here we go. The company used AR aging method, okay? So that's what you have to use, okay? Katya said, look at the beginning balance in the allowance for uncollectible accounts, also called the allowance for doubtful account. It's got, and make sure you get this right, it's got a credit balance of 3,000. And when we come down here to these T accounts, here's that credit balance, 3,000. Here's the accounts receivable balance, 39,304. And you've got that 39,304 that consists of very few invoices, which is highly unrealistic. It should be in the hundreds, but anyway, it depends on the business. And it's all aged for you here, and the percentages are down here, okay? So there's a lot of ways you can screw this up, frankly. You can do a little math error here. You can add up the numbers incorrectly, okay? So you make a mental note that if I always check my calculations at least once, because it's so easy to do a key punch error on a calculator. So just, if you're like me and you do key punch errors, you're gonna wanna check your work, okay? So based on your calculation, make the adjusting journal entry. So you're gonna come up with a number here, but because it's the AR aging method, you have to take into account the beginning balance, because your AR aging method is your total, not your journal entry. Your journal entry is going to be less by 3,000 to get to your total. Okay. Then we say, let's write off invoice number 980. So you have to go back up to your list, find invoice 980, which is 725. We're going to write it off. 3 months later, the customer pays you back. And then we go on and do percent of sales method. It says redo this whole thing for percent of sales. Assume credit sales are 425,000. And this is the method where you just make the calculation. You do not take into account the beginning balance. Okay. All right. Then we have an accounts receivable converted to a note. And we have the company accruing interest. And remember, interest rates are annual, so you're going to have to prorate it from January 1st to January 31st. That's 1/12, 1 month. All right. Big fat depreciation schedule with the 3 methods, and then calculating gain or losses on disposals. Okay. And then we have journal entries for disposal, for retirement or disposal. Okay. And then here we do a revision on depreciation. Okay. All right. So I will be getting the solutions out. I want to check your answers first online. I don't usually do that, but I want to do that this time. Okay. All right. So let's go to the essay question. Okay. And let's give it a good look. So if you have the practice exam in front of you, pull it out. And I want to see what you have for the essay question. And this company is Netflix, and it's pretty old. It's 2006 to 2007. And it's always good for essays. Do you guys feel comfortable with the essay? First off, does anybody feel comfortable with essays after having had me last quarter, or whoever you had last quarter, writing about accounting information?
I mean, it's probably my weakest area, I'm not gonna lie.
Okay.
Like I feel better with just straight numbers versus like qualitative stuff.
Yeah. And I think the way I have you write this, you could probably program it, artificial intelligence, and have it be an essay, but I want it to be just a real straightforward essay. So typically what I've had you do is compare 2 or 3 years of numbers for an item. So if I said to you, let's talk about cash. Okay. What happened to cash? Well, last year it was 400. This year it's 177. Cash went down. What can you say about that? Okay. What's missing from the current assets here? Now, no, let me back up. When I give you an essay question, it's for a unit exam. I want you to write about those items that we've been studying in that unit. So for us, for this exam, chapter 8 and 9, that's going to be accounts receivable, and it's going to be long-term assets. Okay. It's not going to be cash. It's not going to be prepaid or deferred taxes. Okay. So we're going to have, it's not going to be liabilities. Okay, just not, because we haven't been studying those. You could take a look at retained earnings, and because I asked you to. So I did add that on, and it's true, we didn't study retained earnings in this unit, but I asked you to anyway, just for an extra stretch. Okay, so on this balance sheet, Chapter 8, accounts receivable. Is there anything here you can say about accounts receivable? For Netflix, what can you say about accounts receivable between 2006 and 2007? Anything? Too early? No, because we don't have accounts receivable. That's correct, Julie. We don't have accounts receivable for Netflix. So without going into the notes to the financial statements, it's going to be really hard to know what in the world is going on there. But for those of us that have Netflix, why would Netflix not have accounts receivable?
Maybe because it's subscription based.
It is good, Kirat. It is subscription based. I mean, my husband and I have a Netflix subscription. Actually, we have two, which is another story. But anyway, how do we pay for our Netflix subscription? How does anybody pay for their Netflix subscription?
Credit cards.
Credit cards, yeah. So remember what we learned about credit cards in Chapter 8. Credit cards are treated like cash. Okay, so Netflix says, oh, it's January, it's time to bill the Paquettes for their 2 subscriptions. What kind of people have 2 subscriptions? But anyway, and it just goes seamless right against our credit card, and we're charged. And what we learned from Chapter 8 is merchants who accept national credit cards, it's the same as cash. So it's
Real
not
quick,
that. Oh, go ahead.
I was wondering, what about for like them paying if they had people act in their show that they were doing? How about accounts? Wait, never mind. I was saying the wrong thing.
Yeah, it's the opposite, right? They'd have salaries payable, which I don't think they were producing their own shows at this point. Honestly, it could be buried in here if they were doing that, but we'd have to dig into the notes to know what's in those accrued expenses. So whenever it says something like accrued expenses, think salary payable, wages payable, taxes payable, all of that kind of stuff. But we don't have to worry about that for this activity. But now that Netflix is putting on all these shows, yeah, they would definitely be having a lot of salaries payable. But we're talking about accounts receivable, so it's the other side. Okay. Another possibility for Netflix is maybe they do have big accounts with huge companies, and the companies say, no, we're not going to give you our credit card. You can bill us. We're Microsoft. We have a Netflix subscription because for whatever reason, research purposes, who knows? And we use it in, we have 50 or 5,000 or 5 million subscriptions that we use in different ways. And Microsoft says, you cannot automatically bill us. You're going to have to send us an invoice, and we're going to pay it in 30 days. In that case, they would have accounts receivable here. And if that were the case, why do they not have accounts receivable? Another possible reason is they could have factored their accounts receivable. But I'm leaning more towards the subscription model where it just is automatically charged to the credit card. And so we don't have it. So you guys can't talk about accounts receivable much for Netflix because they don't have it. So the other side to that is, what about, if I can put this off. It's not going to let me. Nope. Not today. Okay. The other side is chapter 9, long-term assets. So what can you say about long-term assets? Does Netflix have anything going on with its long-term assets that we've studied in chapter 9? And which ones are they?
We got property and equipment.
Uh-huh. So I would ask you to talk about that because that's what we're studying. I couldn't spell assets. Oh, well. So property and equipment for sure. Real quick, Peter, what can you tell me about the 2-year trend in property and equipment for Netflix without doing any math? Just.
From 2006 to 2007, their assets went up in property and equipment and net.
They sure did. So what happens when a company's property, plant, and equipment goes up? What is that a sign of for a company?
Did they acquire more assets?
And why do they acquire more assets? Why does a company acquire more buildings, more equipment, more land? What's going on in that company that makes it want to acquire more assets?
Grow bigger as a business.
It's growing bigger as a business. Yeah. So, and we all know the story. Well, most of us know the story of Netflix. So the company's growing, and these may not look like big numbers to you, but the difference here is like 22,000. That's almost 50% growth over the prior year. Okay. What other long-term assets can you talk about here? Okay. Now, I don't know if you guys remember this, but 2006, 2007, there was no streaming at Netflix. There was no streaming anywhere. How were we getting our movies?
You gotta like send them in the mail, I'm pretty sure.
They sent them in the mail.
I would just go to Blockbuster back then. I didn't
Or
use
you go to
Netflix.
Blockbuster and roam aimlessly around, like if you're like me, and then leave empty-handed or leave with something you never watch. But yeah, so Netflix still does its CDs. They mail them out to you. You can, or DVDs, you can watch them, and then you send them back. And our subscription that we got at that time was $4.99, and we got 2 DVDs a month, 2, but one at a time. So you'd watch one, send it back, you'd watch another one, and then you'd have to wait to the next month to get your next DVD. Okay, we kept that service because it's a lifetime price because we got in early, and it's all we can do to watch one a month, let alone 2. Just, we're not big TV watchers or big movie watchers. Okay, so content library here is what they're talking about. Okay, the content library. And again, you may not know what's going on. You may not recognize all these terms, but I feel like Netflix is familiar enough to everybody that you should be able to recognize that they have acquired more movies. They've acquired more rights to rent out their movies. Okay, so again, a sign of growth. All right. So these are the ones you're going to talk about here. This is a company that between 2006 and 2007 was growing rapidly. Their model of sending out DVDs in the mail was very attractive to people whose alternative was to drive to Blockbuster, which has, what's happened to Blockbuster? Anybody know?
Went out of business.
It went out of business. Yeah, they could not pivot fast enough. And so by pivot, I mean their business model required you to get in the car and go to their shops. And some people said, oh, we love that so much, we'll just keep doing it. And Netflix said, do it from the privacy of your home. You don't have to get out and get in your car. And clearly, as people in this country, we like to be able to do stuff from home. And so Netflix just scooped up all that market share from Blockbuster. I think there's one Blockbuster left. I feel like there's one. Maybe it's also closing. I don't know. I feel like it was in the news in the last few months.
Yeah, there's one left in Bend, Oregon.
Bend, Oregon. That's it. Yeah. Yeah, the last surviving Blockbuster. And so here's the funny thing is I love streaming. I think streaming is just wonderful, but we've learned that there's a whole lot of titles we cannot stream. They come and they go, and that the DVDs, even now Netflix has, you can get almost any movie on DVD, but you can't stream just about any movie. They bring them and they take them away. So clearly they're paying some sort of royalty to the movie studios or something, and because they're not offering them all the time. So the DVDs have a limited release, and so they're able to do that. Okay, so these are the numbers you want to focus on. And so how do you start this out? What do you say here? I want a real simple first line here. Conclusion. The financial position, and that's why the balance sheet is called the statement of financial position. So we're going to talk about the financial position of this company is, well, you can't, that's kind of your last sentence you want to write. You want to do the middle two sentences first, because you want to do your evidence gathering first and then write your conclusion statement at the beginning. But I literally want one word here: favorable, unfavorable, the financial, I want this sentence: the financial position of this company is, and pick one word: favorable, unfavorable, neutral, or inconsistent. I didn't add that word in. Let's throw that word in. Okay. I can do that. The financial, unfavorable, neutral. Oh, I don't think it's going to let me. Nope. Or inconsistent. Let's see if I do this. Okay, something like that. Okay. Yeah, we'll try it. All right. So then you can't write it, just set up your sentence and fill it in after you've done your next two. So let's stay on number 3. Review assets, pick on a significant item or items, what you feel is most significant. So I want you to focus on both of these. So I want you to get the growth rates and the dollar amounts, okay? So this is what I'm going to throw you in your breakout rooms for 5 minutes, and I want you to come up with, these are your instructions. I want you to come up with evidence for number 3. And I want you to say, I want you to talk about it. I want you to talk about growth rate in a percent with 2 decimals for both items. Growth rate in dollars for both items. And by items, I mean content library and PP&E, okay? All right, so let's do that. So take a picture of the question that I want for there. Let's see if we get the same percentages, okay?